Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil. Paris Rapeseed. The market's rise until January this year started back in August 2024 from the support of the now flatlining long-moving average, currently at 495.5, and the 50% absolute Fibonacci line at 445.5. This move higher did not happen all at once, but during most of August into the first half of September. In the process, prices formed a not very pretty looking reverse head and shoulders pattern with a fairly flat neckline, currently at 478.5, as highlighted in bright green on my daily chart. Now this is important as this neckline recently started to come back into the frame of the market after we saw the changeover gap lower at the end of January. Anyway, 22 weeks ago prices broke higher over this neckline and the last of the moving averages, reaching both the primary and secondary topside targets for the reverse head and shoulders bottom soon after. In the process of rising, the market created a mid-August based expanding wedge pattern that soon morphed into a bull channel and saw prices run up within this pattern until mid-November last year, where they peaked at the March 23 high at 540.75. The turn lower was with a gapping move lower, and the drop was halted by the flatlining medium moving average, currently 513.25. This is also now important as it sits not too far above the current market levels. Anyway, the subsequent recovery higher stopped short of the previous November 2024 high, peaking in early December 2024. The following pullback lower was also not to the extent of the earlier late November fall, thus giving some ammunition for a fresh attempt higher. Now in reality, whilst we made new higher prices, the closes this past January did not match this enthusiasm, closing once again below the March 2023 high at 540.75. All the time it tried higher. All this action brought to my mind my comments from 11 weeks ago when I said, and I quote, "All this raises the question as to whether the action since mid-September, especially since mid-November, is a double top information or a bullish halfway hesitation," end of quote. Well, after the peak in January, it turned out to be neither of those scenarios, but instead a triple top, with the January high itself being a horn top. 4 weeks ago, prices were once again held up by the medium moving average, but with changeover we had a big gapping move lower, originally 490 to 509.75. Now, this is not the largest gap I've seen here in this market, but it was useful enough such that prices opened after it below the gold long moving average, and even below two important supports. The significant dark blue February 2024 today uptrend, currently at 491.5, and the purple neckline extension, currently 485.25, of the April to August 2024 head and shoulders top, plus just above the previously mentioned bright green neckline extension. Since then, prices have recovered further upwards and tried to fill in the large gap overhead, which they very nearly have done, especially after last week's move above the gold long moving average. We still have congestion further up at 506 before the gap can be finally filled. However, whilst there has been pressure to fill the changeover gap topside, there's also some bearish pressure emerging and likely engaging with the market. Notably, what the market has finally constructed between October 2024 and February 2025, and that is a triple top. This pattern, though not a very pretty one, does give us some potential targets below, of a primary target down at 480 even, and a secondary harder to reach target X1 down at 458. Now the move lower 3 weeks ago down to 481.75 had just about reached the primary target zone down at 480, enough for me to consider it reached. However, the secondary harder to reach target X1 down at 458, well, that is now far enough below for me to start considering retiring it completely. It seems the competing forces of gap filling and triple topping are coming to a resolution with each other. Winnipeg canola. Between late July to late October last year, the market created a reverse head and shoulders pattern. 14 weeks ago, I said about this pattern how I was, and I quote, waiting in the wings should the neckline be properly broken, at which time I will likely lay out fresh targets for this new, currently potential reverse head and shoulders pattern, end of quote. Well, we tested the neckline, currently at 702.40, throughout late October and early to mid-November until the patience with those who saw this pattern, me included, and were waiting for a break higher, finally dried up, and the market turned and broke down through the key long moving average, currently 631.60, triggering a big move lower all the way down to lows in late November 2024 that were also seen in February and August 2024 between 571.90 and 575 even, with the ultimate outcome of a monthly key reversal down for November. However, the market did not follow through lower to this pattern, no doubt buoyed by the congestion we saw in February, August and September last year, and back in November and December 2020 at 575 even, 571.80 plus the December 2020 low of 567 even. Since then, prices started a 3 steps up and 2 steps down action, gradually moving higher for a while, seemingly halted by the long moving average, but then breaking higher in mid-January, and 3 weeks ago utilizing long moving average, amongst others, as a springboard for yet a further move up. This action left us with 3 significant features on this market, one of which I previously mentioned and one that came to a cusp 3 weeks ago. So 9 weeks ago I said the following. I highlighted the newly drawn middle tine of the bullish shift pitch hook with the same move as the bullish Andrews pitch hook, end of quote. This now dark blue highlighted bullish shift pitch hook is for the mid-September to late November 2024 move, and the market had become closely associated with the middle tine, most recently pulling back down to it this past Tuesday. The second feature to note, and this is an important one, is that since mid-December last year, the market has formed a bright green ascending wedge pattern, which is currently 652.40 to 683.5. It is too early to give potential targets, topside or downside, or even just potentials for a break higher or lower out of this pattern, but I'm keeping a close eye on it. Finally, and this is the pattern that came to a cusp 3 weeks ago, prompting subsequent attempts higher last week to new highs not seen since late July last year. And that is a weekly key reversal up 3 weeks ago. We have satisfactorily followed on higher from this pattern, though obviously halted by the bright green upper trend line of the ascending wedge pattern. Nevertheless, it is a pattern that is still worthy of noting and keeping an eye on. One final addendum, and is one I'm not totally sure about, but one that deserves mentioning. It is the bow tie formation, the bow tie crossover, the imperfect bow tie crossover of the short medium moving average, currently at 640.90, the medium moving average, which is currently 635.20, and the long moving average, currently 631.70. The moving averages went in and came out in the right order with a bullish incentive, but the issue is that it was not completely clean. Altogether, not a completely clean crossover. However, even with that being said, it is worth bearing in mind that such a pattern would have in about 15 to 20 sessions one or more of the following. A new trend developing, the old trend being reinforced, or volatility. The time period for this to happen here is between the 11th and the 18th of March. Thus, please be aware of this as we approach that period. Bursa Malaysia crude palm oil. I said here 20 weeks ago, and I quote, "Of all the oilseeds and veg oils, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April." End of quote. Okay, so things have developed since then, but a good place to start looking is at those patterns highlighted so many weeks ago. The first of these patterns was broken upper tine, currently at 35.94 of the old August to November 2024 bearish shift pitch hook. I know that it is way below the current market, but the upper tine had acted in the past as a declining support, so I'd suggest keeping a wary eye on it and the thought and image of it just in the back of my mind, just in case. The second pattern is the bright red neckline, currently 44.26 of the September to November 2023 reverse head and shoulders pattern, which I've highlighted repeatedly, which even 3 weeks ago was affecting the market, acting then as a support. Additionally, and this one I also added last time and many times previously, is the dark blue neckline, currently at 44.67 of the September 2015 to November 2017 head and shoulders top. I've not been sure about this one in the past, but as it is an old one, a super old one that had been way below the current market, but has in recent times become significant, so I just like to bear it in mind. The third pattern here is the very slowly rising long moving average. That's currently at 43.11. That stopped the market fall dead in mid-January, and has truly acted as a base for the very recent rise in prices we have seen. Now, there are other newer and closer to the market features to watch out for. To start with, I'd look to how the market has waded up through the wide congestion band between 44.08 to 45.59 over the mauve medium moving average, and then back under it again. That's currently, say, 46.79. Within this congestion zone below, we have the old March 2008 previous all-time high at 44.84, as well as the April 24 high at 45.27 and the June 22 low at 45.59. As I said only last week, I had previously suspected the slowly rising mauve medium moving average might be the one to watch. Next, 2 weeks ago I outlined the mid-August 2024 to mid-January 2025 bullish Andrews pitchfork. Today highlighted in bright green on my daily chart. It is still very much a nascent pattern, being only 6 weeks old, but I think it is worth considering. However, I would finesse or morph this in a heartbeat to a shallower bullish shift pitchfork, or even retire it completely if I thought it appropriate. Right now we are just above the lower tine below. That's currently at 45.39. Next, a new pattern has possibly emerged, and this is very much dependent on two things. Firstly, this is something I see on my daily continuous charts, so if you disagree with that, well, you won't like this or what I say about it. And secondly, the last 2 weeks' actions have helped draw this possible pattern, and it would not have existed without those actions. It is a 2025 based possible reverse head and shoulders pattern with a possible purple highlighted neckline. Through the neckline, we have not as yet broken higher through the neckline, but we have just about completed all other construction associated with it. Additionally, we could also be constructing, instead of a reverse head and shoulders pattern, instead an ascending wedge pattern. The support for this second idea is rather tenuous right now, but the construction does fit in with that idea for now. It is in between the purple neckline top side and the green lower tine below. Now finally, last week, I added this small addendum to my commentary. It was to look out to see if we have made a weekly key reversal here last week. Well, we did. It was a weekly key reversal up. Please take that on board and consider this in all your future deliberations. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.